Welcome to this first live session of the ASX strategy session. Thanks for joining me. Hopefully you're going to enjoy this new enhanced way that that I'm looking to do this. Hope you get a lot of value from being able to ask some questions at the end of the program. As always, I'm going to be doing covering the ASX 200, then moving on, having a look at some of the commodities, looking at gold, copper, and uranium. And I'm also going to include a couple of interesting stocks that have come across over the last couple of weeks with some interesting price action. And what I'm going to do, I'm going to keep the usual format that I go through, where I'm talking about like what I do each week. And so I'm going to save the Q&A for the end, because I don't want to interrupt the usual flow that I think probably works quite well for a lot of you. And as always, everything I discuss today, it's all general advice. It's all general commentary. There's nothing personal in anything I say. So if you like an idea, you've got to go away and do your own research on it. And because it's live, I'm also just going to quickly put up a disclaimer, which just says all that stuff. It's general advice. Doesn't take your personal situation into account. Just pause the video, have a look at that, and yeah, anything you like, you do your own research. And if you're watching the replay of this and you're interested in getting the link to the live stream each week, just register your interest in the link below. I've got it in the description section. You'll see the link saying register for the live sessions. So it'd be great to have you on board for the live ones if that timing works for you. Okay, with all of that said, and of course there'll be an S&P 500 video later on. You'll be able to watch that on Saturday. So let's jump over to our first chart. So let's see. I've got the ASX 200 up on the screen, and it's been it's been a pretty big week for the ASX 200. Big downside week really from where we were last week. It took a good week and a half of no follow through selling before we really got the break at the beginning of this week. And what's interesting, just jumping over to the 60-minute, jumping over to the hourly chart, and you can see the price action that we had last week. So we had the initial break of support a couple of weeks back, sharp rally back, and then for all of last week, we pretty much just tracked sideways. Market couldn't get that follow through selling. And it was right around here that we were filming last week, and where I said, look, it looks like the ASX 200 wants to try and retake this resistance point, but it didn't do so. The follow through selling then did start to come into play, and we're now heading down, and we're testing the retesting the, I think it's the March low. So just going back to our daily chart, and that's where we are. We're retesting this low from March. We can actually draw in some support. So let's just draw some support in, just using the we've got a low from January. Bring that across. Use the March low. And you can see that's just where a rebound has started to take place over the last few days. So very short term in this rebound so far, we don't know where this is going to go, and that becomes a big question now. It's like, it's where to from here. So we've got this situation where the ASX 200 has fallen 6%. Actually, it's a little bit over 6% in about 3 weeks. So it's now like, got the moving averages up here. We've got the 50-day, the 100-day. We really are now stretched beneath these moving averages. So from that perspective, I think there's a good possibility that we see a bounce, and we actually are seeing that bounce develop over Friday as I'm filming, and it is coming off this support zone at around 6,800. I think there's been a lot of technical damage done over the last few weeks. So this isn't a bounce that I'm interested in buying. I think it really is a case of, I think, watching what the price action, how it develops over the next week. But whilst we're below these moving averages, it just doesn't set up for me as a buy the dip opportunity. It's going to take a bit of time to sort of see how the price action unfolds. Can we start to develop a base? Or is it a shallow bounce before then a retest and a break of this support? So, as I said last week, I think there's definite vulnerability to the market. I think caution is is very much required in how we play the ASX at this current point. Jumping over to the small ordinaries and having a look what it's done. And look, no doubt it's been a disappointing week for the small ordinaries. Another big down week. Retesting these lows that goes back to September last year. So we're retesting. We're back to where we were basically a year ago for the small ordinaries. Now we did have a clue that this was potentially happening when we had the breakdown a couple of weeks ago from this smaller trading range, which is within this larger band bounded by the green line. So we got that breakdown. And what was interesting last week, I think I was saying, look, we want to see what sort of, can we get some sort of a bounce? And often you'll hear me talking about, I want to see, what does the bounce look like? Is it a shallow bounce or is it a strong rebound? And this is your classic example of a shallow bounce. The market couldn't pick itself up off the floor. And when you get that situation where you got that shallow bounce, it really does maintain the vulnerability, and it opens the potential for another leg to the downside, which is what we've seen this week. I think that I have been hopeful. Over the last 6 or 9 months that this could develop into a basing structure. At the moment, there's just no signs of that. The momentum is very much to the downside. I think it just remains a case of being cautious, managing risk. Nothing has changed from that perspective since we started to get this breakdown a couple of weeks ago, and spending this time beneath the moving averages. Most of my recent trades have been exits. If a stock has hit its stop loss, if it's hit its exit point, it's really been a situation that I wanted to get out of that stock, haven't wanted to hold on, haven't wanted to hope for rebound. So what I'll do now, I'm going to jump over and have a look at some of the commodities. So let's start with gold. So I think this is a great example of what can happen when support breaks. So this is a level we've been looking at for a few weeks, coming in at around 1,890. So we had the break of support, and also when a market is trading below its moving averages. I think this is this is an example of why you do get that vulnerability below moving averages. Breaking support below the averages, it really does open the possibility for a swift move to the downside. And that's what we've been seeing in gold. It's really interesting, I think, to reflect on, just reflecting back to May when we had this really strong upward move in gold. And you might remember what I was saying as we got towards the latter stages, I started saying, look, not an asymmetric entry point with the market being below overhead resistance. It didn't stack up as a buying point. But at that time, it's always so hard to imagine that a sizable correction could be just around the corner. But so often that's what happens. And it's very much the case of what's been happening in gold. I think that the play now is like, we've got to work out, like, how does this continue to unfold? We can put on the Fibonacci retracements and get an idea from that, just looking at the low back from late last year back up to the high. We're getting towards the lower end of the Fibonacci's. I don't think they provide us with a great deal of guidance, but I put them on because I do know that people are interested in them. It's a wide band, and we're within that sort of area where it could find support. Also, I think what is more helpful is just looking at some of those structural supports. So just looking across this chart, we can look at some low points and just looking at lows and highs over the last few months, and we are coming up to a support zone at the moment around about 1,800. So it's a good round number as well, a psychological number, 1,800. I think there's every chance we see some sort of a bounce developing gold, maybe over the next week, and also just putting on some Fibonacci supports. So not the Fibonacci, sorry, the RSI. Just putting the RSI on this, and you can see, just compressing this a little bit, and you can see that this is really about about as low as the RSI tends to get on gold. Doesn't signal there's a low point, doesn't signal there's a major low coming. RSIs can remain oversold for a while, but just looking at the extent we're stretched beneath the moving averages, looking at structural support beneath the market, and looking at an oversold RSI, it just leads me to think maybe there's a bounce coming. But having said that, it's not a bounce that I'm looking to buy. I think that I'm happy to miss the low point. I still like that medium to longer term outlook for gold. That this has really been a great big trading range that gold has been in since August 2020. It remains a large sideways range, but I don't want to preempt where a low, if a low is going to form, is going to be. I think it's a case of be happy to miss the low and let the price action clear itself up, and then we look for the opportunities from there. Quickly going across to silver, breakdown from the trading range it had been in over the last 6 or so months. When I first started looking at silver about 6 weeks ago now, I had a more positive outlook. I thought maybe this was with gold coiling up. I thought maybe they could have resolved to the upside. But just last week we were looking at I showed you one of the large silver miners, and like many of the silver stocks, they're all trending down, much like the gold stocks had been. So it just looked like something was amiss, and there we have it. It was amiss, and the metal is now caught up with what the miners have been doing. Going across, having a look at copper. Similar situation, more breakdown activity, more moves to the downside. I think there's a great longer term, medium to longer term story, but the price action just hasn't agreed for some time. Copper's been below these moving averages for pretty much the last 6 months and continues to weaken. So there just hasn't been a hurry to do anything. If we look at the copper miners ETF. So this is the US listing, COPX, Global X Copper Miners ETF. It's been one of the plays which I often show on these videos because I think it's a great way to potentially get exposure to the copper miners. But we've been stuck in a range, and whilst we're in a range, often the best play is not to preempt a breakout, not preempt which way it's going to go, because it can take a lot longer than you think, and it can also go in the opposite direction to what you think it should go. And over the last few months, these copper stocks have been trending lower, broke out of this little congestion band, compression range a few weeks back, and now we're testing important support. So this is just a good example of things can take longer than you think, and sometimes what you think doesn't happen. So we don't know with copper. Copper could still base sometime somewhere around here, and over the months ahead make its way higher. But it's not the play at the moment. It's currently just it's one of those ones to step back, watch, and wait for better opportunities. Jumping over to uranium. Now, finally, we're getting this pullback that I've been talking about, I think, for about 3 or so weeks. It just kept relentlessly marching higher. The pullback was inevitable. It was going to happen at some point. It's now starting to bring the price back towards the 50-day moving average. Still well above it. We can put some Fibonacci's on now that looks like we might have some sort of a high point, and you can see we're at the top of the Fibonacci band. It could well be a case where uranium needs to spend several months just consolidating this big advance we've had since July. The moving averages, the Fibonacci region, they're all sort of give us ideas of where a proportional pullback could come from. I think the fun in the uranium stocks is probably, I think there's a good chance it's over for the moment. It's markets just can't keep rising like uranium had been doing over the previous weeks. They do need to pause. Pausing is all part of the price cycle. I was looking at some of my uranium holdings through the week, like one of them, Bannerman, which I've spoken about in recent weeks. Like I look at this, and it's up it's up something like 50% in the last 6 weeks from where I got in. So it's always tempting to say, oh, look, I'm going to lighten my holdings and just bank a bit of profit. But look, I think a lot also depends on your time frame. If you're a shorter term trader, you're a swing trader, well, that's definitely the sort of thing you start considering. From my own perspective, I'm looking at a medium-term trend-following approach. I'm looking for stocks that could do well over maybe 1 to 2 years. Bannerman's one of those stocks which has the potential to go up 100, 200, 300% over a couple of years. It may not do that. This could be the peak and it could come all the way back down. I might be getting myself out at even. But that's the sort of risk I'm prepared to take to get those big multi 100%, 200% type stocks. A lot of them won't do that, but some of them will, and that's where I can make a lot of the money on what I'm doing. But whether someone's taking profit here or not, as I say, it depends a lot on their time frame, what they're trying to achieve. Now, okay, so this is where the normal part of the video would finish. What I'm going to do now, though, I want to look at a couple of stocks which have turned up in the Motion Trader signals over the last 2-3 weeks, which I think are looking interesting. So look, the first one I want to tell you about is this one here, Aussie Broadband Limited. So and we're going to do some Q&A. So I can see there's some questions there, but I just want to keep the flow of this. Look at the questions in a couple of minutes. So with Aussie Broadband, it's an interesting stock. It's one of the top 5 NBN providers. They've got about 400,000 customers. They've been getting some pretty good growth in recent times. Market cap's about $1 billion, so it's in that range where it's a large company, but it's certainly not one of the top companies. So there's plenty of room for it to continue to grow. So this first turned up in the signals in March. You can see the moving averages crossed. We got an initial break higher. And this is one of the things that often happens when you get these momentum-based signals. They don't all keep running straight away. A lot of them, well, some of them don't run at all. Some of them lose momentum and then fall back completely. Others will complete their initial run and then they'll consolidate for some period of time, perhaps several months. That's what's happened with Aussie Broadband. Motion Trader approaches to have a wide trailing stop, so it's seen off this pullback and it's been on board during the next upward momentum swing. Moving averages crossed again. Got a second signal. Because we had an initial signal in March, the second signal has come in just recently, just in the last couple of weeks, and that's what's brought it to my attention to bring about today. So it's an interesting one because, well, firstly, it's above these rising moving averages. A lot of stocks don't have rising moving averages at the moment. And we recently had a break above resistance. So I'm just going to have a go at drawing some resistance and just looking at the chart to try and line some levels up. Let me just finesse this a little bit. We've got a resistance band. I wonder if I can extend it across. Yeah, look, you can probably do, that's probably about the mark. So it's around $3.60, 10 cents either side sort of thing. So yeah, picks up some work back here, and then 2022, more in 2022, couple of highs. And then we've got this break above it just in the last, that would be in the last 3 weeks. Another interesting thing that we can do, I'm going to put on a volume study as well. And when we put the volume on, what's interesting is that on these recent up moves, you can see there's a big increase in volume. And then as we go through the compression consolidation, the volume drops away. Then we've got another surge higher in late September, and volumes picked up. Now we're going sideways in a pretty in a tightening range, in a compressing type of range. Volume is again dropping away. So these are all encouraging signs for this stock. Now, look, we've always got to remember, now the stocks I'm talking about also, they don't have special properties. They're just ones which look interesting. A lot of interesting stocks don't go on and do anything. So these aren't special ones you've got to race off and buy. They're just interesting ones. Have a look at, have a think about. If you like fundamentals, do some fundamentals on them. Put them on a watch list. things to consider. They're not necessarily things which are going to go up 100%, because I don't know which ones are going to do that. It meets the criteria of a stock which could do really well, but you never know. This could well consolidate some more for several weeks or longer with the ASX 200 in the situation it is, but it does have that potential to start another leg up. So I think that's an interesting one to keep an eye on, Aussie Broadband. Now, one other one I was going to show you is this one here, Motorcycle Holdings Limited. It's it's probably one which a lot of people haven't heard of. If you're into motorcycles, maybe you know them as a service provider, but for most people, they probably don't know it. They've got a whole string of dealerships down the East Coast, and they've had good revenue growth in recent times. Market cap's about 160 million, so it's one of those ones at the smaller end of the range. Let's just compress the price action. So this is where it listed back in 2016, had an initial strong move after the listing, but then went through a pretty miserable few years into the COVID low. One of those stocks that did well in the COVID recovery, with people out trying to do holidays locally and spend money on things that were of interest to them, since they couldn't travel overseas and the like, perhaps. So they had a good performance, but 2022 saw, like a lot of stocks, a lot of selling in the stock. I think it was down something like 60%. Yeah, so look, lost 60% during the pretty much during 2022. What's interesting over the last few months, started to see this momentum shift to the upside. Moving averages have crossed. We're just having a pullback to the 50-day moving average at the moment. I just put that volume study back on. Just having a look at this volume profile again, you can see that the volume's increased just in the as we've had this strong move up, and this is what's triggered the motion trader signal and got my attention back in the stocks. I hadn't looked at it for ages because it's been in a downtrend. So it's look, it's one of those interesting ones to keep an eye on. Can this run hundreds of percent? Well, I don't know. Maybe not in the industry it's in, but it looks like it's certainly got upside potential. Current market conditions, well, look, maybe that can hold it back, but it has been going against the grain of the market over the last month or so. I think it's also got quite a good dividend. It seemed to have paid 20 cents in dividends in the last 12 months. So that would put it on at around $2. That puts it on a yield of around 9%. So look, it's one of those interesting ones which could be worth a look at, or at least just see what happens over the next over this bit of price action we're getting in the ASX 200. Can it continue to hold its ground? So what I want to do now is have a look at some of these questions which has come in, and one of the questions is, am I watching Magellan Financial today? Well, I actually haven't been, because I've been prepping to do this video, but we can have a look at it and see what it's doing. So I actually can't see it in my oh, here it is. Here's Magellan. Yeah, so that's a sharp move to the downside, and well, this is the type of market that we're in. It's it did have the signs that it was having some sort of recovery. We've got the moving averages had crossed, shares had broken higher, and but that break didn't continue. It's quickly come back to earth and below the moving averages and dropped today. So this is one of those stocks which I wouldn't want to be holding on to. And so, yeah, look, it's a case of these things happen in skittish markets, and the selling is amplified when you have so much negative sentiment going on. Favorite gold stock at the moment? Look, I don't have a favorite gold stock at the moment. It's I think I think it's a case we've just got to. I think with the gold stocks, it's a case of we've got to wait for the metal to stabilise before we can consider like what we could do in gold. Evolution was holding up quite well, but it's giving way also. So I just prefer just to step back from the golds at the moment and probably not try and anticipate a low. And now, can I have a look at, is that NOX? So let's just duck over to NOX and see, have a look at this. So pharmaceutical stock. Well, look, this is always going to be a tough one. These low price stocks these low price stocks are always prone to erratic movements and very hard to pick a stock like this. It's in a downtrend. It's been in a downtrend for ages, below the moving averages. It's just not one I'd look at. It's not one I'd play now. It's that they can come back to earth just as quickly as they've gone up. So not the sort of play that I'm looking at. And got a question: is gold correlated with the silver price? And often it is. Often gold and silver do correlate. So what we can do, let me get. I'll just switch to the gold futures chart. I've got less. Just clean it up, just so I've got no lines on it. And what I can do, I can add in silver. So let's just. Let me get a chart of silver. I'll do it. Okay. So orange is silver and black is gold. And you can see it's a fairly good correlation. It doesn't always go dollar for dollar. In fact, it rarely goes dollar for dollar. But look, there's definitely a correlation there. Gold has been a better performer over the last maybe the last decade. But yeah, look, they certainly do correlate. Do correlate. Now, I've got a question about oil. How low can oil go? So oil's just having a look at oil. So that's on the weekly chart. Let's come back and have a look at it on a daily. Well, at the first thing I'm looking at is the moving averages. Where is the price relative to the moving averages? And I think we're coming back to the 100-day moving average. Oil is breaking below some short-term support. I think we just need to watch here. I don't think this is a buy the dip moment. If it can hold the 100-day moving average and start to stabilize, it could well be a case that this could continue to move to the upside. But at the moment, we just need to, I think, give this a little bit of time. See whether the Fibonacci's could potentially help. Look, the 50% comes in and around where that 100-day moving average is. This isn't a market which I'd want to really be. There's just not a lot of great standout opportunities at the moment. And we're seeing that in the commodities broadly: gold, silver, copper. Uranium has been the standout, but even it looks like it needs to pause now. It'll be encouraging if oil can find support around current levels and then establish a platform which can take it higher. But it could also be a case of it moving back down towards its support. So not one which I have a strong view on, because we just don't have that immediate momentum. Now, I've been asked about a stock, STP. So let's call that up on the chart. Step one. So that's I think this is a motion trader stock. Moving averages crossed back in June. We've got that strong acceleration during August. It's like what I was saying with uranium, in that every strong move needs some consolidation. So I'd anticipate that maybe this is a stock which does need to do some work back towards the moving averages. It's also it's fallen from great heights. We've got a large basing period over several years. It does have potential to turn into something larger on the upside. Most certainly does, with those whilst the price is above the moving averages. But look, some consolidation of a strong advance would be a very normal thing for one of these markets to do. CXO is another stock. So that's core lithium, isn't it? Now, I've spoke about core lithium after its breakdown, and it's really interesting, isn't it? So we've got this strong upward move. So I think I might have seen this on the news as well. So just on the nightly finance, up 30%. So it's quickly put on 30%. People go, look, you've got to get in, pick the lows in these stocks because you can get these sharp moves to the upside. But why pick this point as the low? You could have had the low on the 28th of September, or you could have tried to pick the low on the in early September. You could have tried to pick the low back in August. If you tried picking the low in early August, well, then you got a what did you get for your trouble? You got a 33% decline. So these sharp moves to the upside, they look tempting. They look like you want to try and get them, but they're very hard to get, and you can quite potentially get yourself into the downdraft of a continued sell-off. Price is now turning lower again. The trend is still down. Like, just looking at the 50 and 100-day averages, it's like I'm not going to try and pick a low in these stocks because I know I can't pick the lows. I might get lucky here and there, but more often than not, it's I'll try and pick a low and a stock will continue lower. That's just how it usually works. This is a stock, a lot of technical damage done. It's not one I want to go to. I think it's risky. I think the potential to lose money is very much still there. What else? So thoughts on DRO. Drone Shield. So that used to be a motion trader stock, and we got stopped out of it. So Drone Shield turned up in the motion trader signals back in January, had an initial good run, consolidation around the moving averages. That was all promising. Then it broke down. Exit stop was hit. It hasn't triggered a new buy signal on the way back up because I suspect its volatility's been too high, and it's the volatility filter which I use has kept it out. It's not a stock which I'm currently interested in, really. It's below moving averages. Moving averages are crossing. It could stabilize here and turn back up, but really, it's, for me now, it's probably like just looking at these previous highs. I'm probably looking, like, to get interested in a stock like Drone Shield, it'd probably take price action, where it chops around for a while and then starts to move up. Something like that, where you get some stability, some sort of basing formation, and then some upward momentum. That's when I'd start getting interested in a stock like that. But for now, it's a case that, well, who's to say this isn't going to continue back down to 16, and this was all just excitement about a new technology or something that they were doing, and that's now subsided, and we have that selling coming in. So just and XTE is another one someone's just asked about. So having a look at XTech. And XTech, well, it's becoming interesting. It's becoming interesting, but from my perspective, I'm looking at those, like, if you were looking at 20 and 30-day moving averages, you'd probably be saying, look, this is starting to be a stock to really pay close attention to. I'm looking at 50 and 100-day moving averages. Not that the 50 and 100s are better, it's just that they suit the medium-term approach that I'm using, and I also get fewer signals. So if I'm using 20 and 30 days, I'm going to be getting a whole lot more signals. And also, you can see there's been several occasions where XTech's got up towards the that 100-day average and then turned lower. So maybe this is a turning point, but I'd probably want a little bit more information, a little bit more price action before getting involved with this stock. Again, it'd be a situation where, you know, if it started, let me just get that back. If it started to, you know, track sideways for a bit, more of a basing structure, it'll give those moving averages a chance to start to turn and then start to go up. Well, then I start getting really interested in it. But at the moment, it's just a little bit too early. It's looking interesting, but just a little bit too early. Big trend. What are your thoughts, TR? Now I've got a stock code here for, I'm not sure, TR. It's 4-letter code, which, what would that be for? Actually, I don't know what that would be because we don't have any 4-letter codes to go off, so won't be able to do that one. Just looking at some of these other ones. Okay, here we've got a SYA. Let's have a look at SYA. Look, again, I'm sure you can guess what I'm going to say. Moving averages, it's too far below the moving averages. I don't want to play. I don't want to try and pick the low. It could be a great buy, but I've seen these stocks also just continue down, all the way down, and then they eventually get delisted. Not saying that's going to happen in this case, but I've seen that happen before. So I just don't want to play below the moving averages. I need stock to at least be above moving averages, even if the moving averages haven't crossed. You know, just got to be above the averages. Below, it's just there's too much risk that you get the downdraft and they continue to decline. So I'll just do a few more. SHA. So these are really interesting names which you're coming up with. And so I haven't heard of some of these stocks. I've never heard of this one. Only a relative recent listing. Look, you know, moving averages have kind of crossed. Well, they have crossed, but it's, yeah, look, it's going to be low volume. I don't know anything about the business. Not that I usually do when I buy a stock. But for me, this hasn't done enough to trigger a signal. So I don't just look at a moving average cross, because often you get these situations where you get averages crossing, but the shares don't have any immediate momentum with them. So that's why I also use a confirming signal. I'm looking for stocks to be at a 70-day high as well as positive moving averages. Now, 70 is not a special number. You could be using 50 days or 40 days or 100 days. But it's some extra measure. It's for me, that's probably the trigger point, hitting a new high whilst the moving averages are positive. So this doesn't qualify on that basis either. So if it gets up to $1.75 over the next few months, the moving averages are positive, well, it would satisfy the criteria I look for a trend. But yeah, then you've got to think, like, do you want to get involved with the patchy volume? And but at the moment, not quite there yet. And DMP Dominoes. So I had a look at that recently, and it was looking interesting, but I haven't looked at it in the last 2 or 3 weeks. And yeah, so Dominoes, it's like we've got the early signs that maybe a trend change could be developing. So the moving averages have crossed. But for me, it hasn't triggered a signal. Hasn't triggered a signal on Motion Trader yet, because whilst the moving averages have crossed, the shares haven't traded up to a new 70-day high. So this is one of those things that can keep you out of stocks that don't follow through. So it doesn't, just because it hits a 70-day high doesn't mean you're going to get the follow through, but it's just putting another indicator moving in your direction. In this case, Domino's has now slipped back below those moving averages. Averages look like they now could cross lower again. I had a situation up here where the moving averages crossed, but the momentum wasn't sustained, then they turned lower. So I don't know. I don't know which way this is going to go. If they can stabilize here and then push above these recent highs from August, September, well, maybe Domino's comes into play. Big decline, very much out of favour. Be a recovery story at some point, but for me, I don't have enough price action to run with it. Another stock, ALQ. Yeah, below those moving averages. Like there were signs that this stock was trying to turn higher earlier in the year. Then again in April, I'm familiar with the code. It could have even triggered an entry signal. But just looking at how far it's come back, yeah, look, it could still be. Look, it's a stock that I wouldn't enter now. I wouldn't buy this stock now. If I was in and I was using a wide exit stop, I might still be giving it time. Or I could also be saying, look, I've given it enough time. I've got to rule off and move on. But as I say, look, it's not an entry. It's not a stock I'd be looking to enter whilst below those moving averages. So look, I think, yeah, look, I think we've been going for a bit over. The aim with these was to really come up with something which we could run for about 40, about probably around 30 minutes. So look, I think we'll wrap that up there. It's first attempt of doing this. Hopefully next week we get those charts right and we get everything coming online at the right time. Hopefully it's been interesting doing it this way. And leave some comments, give me some feedback on what you like about the current format, what you don't like, whether we like. I'm not sure like how many charts we go through at the end. Tell me what works for you, and I can continue to fine tune this over the next few weeks to make this a really new and hopefully an interesting and exciting and engaging way to move forward. So thank you for joining me for this inaugural live stream, and yeah, look forward to coming back, doing it all again with you next week. So, okay.